Welcome back to the Trading Psychology series. Great to have you with us for episode 7.
Yeah, episode 7.
We're tackling a tough one today. Overcoming fear in the market.
It's a big one.
Yeah. I know a lot of traders struggle with this.
Absolutely. Every trader does. Doesn't matter how experienced.
Right. Fear is just part of the deal when you're in the market, right?
Mm-hmm.
Dealing with risk, uncertainty.
Yeah, and it's like the market is designed to poke at those fears sometimes, you know?
It really does feel that way sometimes.
Huge swings, crazy news.
And everyone on social media is saying they're making a fortune.
Oh, yeah. You can't escape that. It's easy to get caught up in it all.
Yeah. Which is why it's so important to have the right tools, the right mindset, so we can make good decisions even when things are going haywire.
Absolutely. And that's what we're going to focus on today. Turn that fear into an advantage.
I like that. So let's start by just mapping out the landscape here. What are the main types of fear that we see tripping traders up?
Well, I mean, the most obvious one, fear of losing money. Pretty universal, right? Nobody likes to see their account balance shrink.
It's primal, that feeling of loss.
It is. And there's actually, a whole psychological principle behind that called loss aversion. Explains why it hits us so hard.
Loss aversion. Yeah, I've heard of that. Isn't that the idea that losing, let's just say $100 hurts more than gaining $100 feels good?
Exactly. And this isn't just some trading thing. This is hardwired into us. Think about our ancestors, A loss for them, that could have meant going hungry.
Right.
So our brains, they evolved to avoid those losses, whatever it takes.
So even though we're not facing life or death in the markets, those same instincts are still driving us, even if it's to our detriment sometimes.
Yeah, and it can show up in so many ways, Holding on to losing trades too long, cutting winners short, or even just avoiding trades altogether because that potential loss just looms so large.
Right. So we need to understand that bias so we can start to counteract it.
Exactly. And one of the best ways to do that, shift our focus away from individual trades and towards the bigger picture, the long game.
The long game. Okay.
Yeah, because another fear that gets a lot of traders, fear of being wrong.
Oh, tell me about it. Every losing trade, it just feels like a personal attack on your judgment.
Yeah, it can really hit your confidence, especially when you're starting out. Leads to all sorts of bad habits, revenge trading, doubling down, trying to force the market to do what you want.
Oh, I've been there.
But here's the thing. Even the best traders, they have losing streaks.
Right.
It's part of it.
It's part of the game, yeah.
Nobody has a perfect track record. In fact, a lot of the pros will tell you their biggest lessons came from their biggest losses.
So it's not about avoiding mistakes. It's about learning from them, turning them into data.
Exactly. And one of the most valuable tools you can use for that, a trading journal, not just tracking wins and losses, but really digging into why you made each decision.
Yeah.
What were you thinking? What were you feeling?
So you can start to see those patterns. Like maybe you always get over aggressive after a big win, or you tend to freeze up when the market gets choppy.
Exactly. The journal helps you become aware of those tendencies so you can start to address them.
Yeah, I like that. Speaking of volatility, I think that's another major source of fear for a lot of traders. Those sudden price swings can be unnerving.
Oh, for sure. Especially when you're watching your money on the line, fluctuating in real time.
Real time.
Yeah. And that's where a solid trading plan, it becomes crucial. It's your anchor in the storm, right?
Yeah.
Keeps you grounded when everything else is chaotic.
Because when fear takes over, it's easy to abandon your strategy.
Oh, yeah.
Start making those impulsive decisions.
Oh, yeah. You just react instead of thinking clearly. But if you've got a plan, predefined entries, exits, clear risk management rules, takes the guesswork out of it, you're not deciding in the heat of the moment. You're following a roadmap that you created when you were calm.
So that roadmap, that helps with the discipline, which is so important when it comes to managing fear, right?
Absolutely. Discipline is what allows you to stick to your plan, even when your emotions are screaming at you to do something else.
And I think that leads us to another fear that's so prevalent today, especially in this hyper-connected world, FOMO, fear of missing out.
Oh, FOMO is a real monster, especially with social media.
Oh, yeah.
You constantly see people bragging about their wins or everybody's getting rich quick. It's easy to feel like you're falling behind if you're not in on the action.
Which is incredibly dangerous.
Right.
Because it leads to chasing those pumps and dumps, jumping into trades without doing your due diligence.
Absolutely. And you know what? Most of the time, those impulsive FOMO trades, they end badly. You buy at the top, you sell at the bottom.
Right.
It's the exact opposite of what we want to be doing.
So how do we tame the FOMO monster? How do we stay focused on our own game plan when everybody else seems to be making a killing?
Well, first, I think it's important to remember social media. That's rarely the whole story. People brag about their wins. They don't talk about their losses.
Right, right.
You know that saying, don't compare your behind the scenes to someone else's highlight reel. So don't get caught up in the hype. Focus on your own plan, your own goals. And if a trade doesn't fit your criteria, just don't jump in. It's okay to sit one out. Doesn't matter what everyone else is doing. There's this idea with FOMO, too, that there's a limited number of opportunities. Like, you're going to miss the boat if you don't jump in right this second.
Yeah, got to get in on the ground floor.
Right. But that's just not true in the market. There are always new setups, new trends.
If you miss this one, there'll be another one.
Exactly. Another one and another one and another one. Stick to the strategy. Only take the trades that fit your plan.
Makes a lot of sense. So we've talked about why fear is such a big factor in trading. In some ways it can show up. But what can people actually do about it? What are some practical things to manage that fear and start making better decisions?
Well, like we were talking about before, one of the best tools is having that trading plan. And I mean, really well-defined, not just a vague idea, like a roadmap that takes the emotion OUT of the decision.
Okay, so when we say trading plan, what are the key elements there?
First, got to define your style and your risk tolerance. Are you a scalper, in and out for quick profits? Or a swing trader, riding trends for days or weeks?
Right.
How much capital are you actually comfortable risking on any one trade? Those are the questions you got to answer before you even think about placing an order.
Makes sense, because a strategy that works for a day trader might be a disaster for somebody with a longer time horizon.
Exactly. And someone with a low risk tolerance is going to get freaked out by volatility that a high risk trader barely even notices.
Right, right. So you got to find what fits you, your personality, and your goals.
You got it. Then, define clear entry and exit criteria. What specific signals are you looking for? What's going to trigger you to get into a trade?
Right.
And just as important, if not more so, when do you exit? Both for taking profit and D, for cutting your losses.
Yeah, having those exit strategies beforehand, that's huge, right? Because once you're in a trade and the emotions are swirling, it's so easy to second-guess yourself.
Oh, yeah, you start doubting everything.
Yeah.
Predefined exits, they take that emotion out, and they protect you from the big losses that can really set you back. Not just financially, but mentally, too.
Right, right.
You also got to decide on position sizing. How much are you putting into ECH trade based on your risk tolerance and that specific setup?
Makes sense.
It's all about managing risk. Can't be overexposed if things go south.
And then finally, the plan needs to account for different market conditions.
Right.
Like what happens if volatility spikes?
Right.
What do you do during those periods where the market's just going sideways?
Exactly. Got to have strategies for all those scenarios. That way you can adapt and you don't feel lost or panicky when things don't go exactly how you pictured.
Right, right.
Yeah.
Okay, so let's say someone's gone through that whole process. They've got a solid plan.
Yeah.
How do they actually stick to it? Especially when those fear-driven urges start creeping in.
Discipline, my friend. Discipline. It's like having a workout routine and then skipping the gym every other day. The plan's not going to do the work for you.
Yeah. Easier said than done, though, right? Especially when fear starts whispering those doubts in your ear.
Oh, it happens. You start questioning everything. Maybe chase a hot tip that has nothing to do with your plan.
Yeah.
This is where a pre-trade checklist can be super helpful, something you go through before entering every single position, just to make sure it aligns with your plan, your risk management.
Okay, so like a final sanity check before you pull the trigger, what kinds of things should be on that checklist?
Well, first and foremost, does this trade actually meet your entry criteria, like the specific criteria you laid out? No bending the rules just because you're feeling impatient or FOMO's kicking in.
Right.
And of course, risk management. Is the potential loss on this trade within your limits? Are you comfortable with the potential reward relative to that risk? Like, don't chase a tiny profit if the downside could wipe out a whole week's worth of gains.
Right, right.
Having that checklist, it interrupts those impulses, forces you to pause, think rationally, even when your emotions are saying, Joe, go, go.
Right. Okay. So we've got our plan. We've got our checklist. Any other tools that can help with this?
The trading journal. I know it sounds old school, but it's not just about tracking wins and losses. It's about understanding the WHY behind each decision. See patterns in your behavior and use that to actually improve over time.
So it's not just about what happened in the market. It's about your own role in that outcome. Why did you enter that trade? What were you feeling at the time? What could you have done differently?
Exactly. All those details. Write down the setup, entry, exit, emotions, rationale. The real magic happens when you go back and review that stuff. You start to see the trends.
Yeah, like, oh, I always overtrade after a big win, or I hesitate to take profits because I'm afraid of missing out on more.
You got it. That self-awareness is golden. You can finally start to address those weaknesses, right? Make adjustments. And hey, don't just focus on the negative. Celebrate the wins too.
Oh yeah, that's important. Acknowledge the successes, helps to build confidence.
It's like a pat on the back, like, hey, good job, motivates you to keep going.
Okay, so we've got planning, checklists, journaling. What about in the moment when you're eyeing a trade and that fear starts creeping up? Any techniques for staying calm and sticking to the strategy?
Well, first got to remember, volatility is normal. Prices go up, they go down, sometimes those swings get wild. Accepting that can really help with the fear and anxiety.
Right, like expecting calm seas all the time when you're sailing.
Exactly. Got to be prepared for those storms. And that starts with managing your risk. So during volatile periods, maybe you reduce position size, or even just step away completely if it's too much.
Yeah.
Better to preserve capital than force trades when you're emotional. You don't have to catch every move.
There will always be more opportunities.
Always. Sometimes the best trade is no trade. And if you're really struggling to stay calm, try this focus on higher time frames.
Higher time frames.
Yeah, when you're looking at those short-term charts, everything seems chaotic and unpredictable. But you zoom out, look at the bigger picture, and you start to see the trends.
So it's like seeing the forest for the trees.
Precisely. That broader perspective, it can really calm your nerves. Less temptation to react impulsively to every little wiggle. So if you're getting overwhelmed, step back. Remind yourself, this too shall pass. The market always finds its way back eventually.
That is reassuring. Now, another fear I think a lot of traders have is giving back profits. You know, you worked hard to build up your account, the market turns against you. You just want to hold on for dear life, afraid to let those gains go.
I know exactly what you mean. It's like we get attached to those unrealized profits, even though, like you said before, it's just numbers on a screen until you actually exit the trade.
Yeah.
And that fear, it can lead us to exit way too early or even avoid taking new positions altogether.
Right, right. So how do we get over that? How do we let those winners run?
Got to reframe our thinking. Those unrealized profits, they're not money we've made, they're potential. They're not ours until we lock them in. And clinging to them too tightly, that can actually prevent us from maximizing our gains.
So how do we find that balance between protecting profits, but also letting the trades breathe?
One technique is a trailing stop-loss order.
A trailing stop. Remind me how that works.
So it automatically adjusts your stop-loss as the price moves in your favor. Price goes up, your stop follows it, locking in those gains. Price reverses, the stop gets triggered, protects you from a big loss.
Okay, so that takes the emotion out of it, lets the market do its thing.
It does. Another good strategy is to segment your gains.
Segment our gains. What do you mean?
Instead of exiting all at once, take partial profits along the way. So winning trade, prices move nicely in your favor. Close out a portion, lock in some profit.
Taking some chips off the table.
Exactly. Let the rest ride, use your trailing stop, balances risk and reward.
You're securing some profit, but still letting the trade potentially grow.
Right. And it can actually reduce that emotional attachment too, because you've already taken some money out, you're less likely to panic when the price inevitably pulls back.
Right.
Which leads to another important point. Detach emotionally from the trades.
I think that's one of the hardest things for traders to do. You know, we put so much of ourselves into the analysis.
It is, but gotta remember, the market doesn't care about our feelings. It's gonna do what it's gonna do.
Right. Got to have that objective view. Don't get caught up in the euphoria of a win or the despair of a loss. Just focus on executing the plan and learning.
Exactly. And that's where patience comes in.
Patience.
Trading is a marathon, not a sprint. Will be times the market moves in your favor, times it moves against you. And it's during those times it's moving against you that the fears get amplified.
Oh, for sure.
So patience is key. Stay disciplined, stick to the plan, ride out those swings. Consistent profitability comes from making good decisions over time, not from chasing those quick wins or trying to force the market to do something it doesn't want to do.
Right. So patience isn't just a virtue, it's essential. Let's switch gears a bit. Another challenge that can be fueled by fear. Hesitation.
Oh yeah, hesitation can kill you in trading. Miss opportunities, second guess yourself, doubt your analysis.
And I think often that stems from fear of being wrong, lack of confidence.
For sure. You see a setup, aligns with your plan, but then you hesitate. Is this really it? Maybe I should wait for more confirmation. And by the time you work up the courage to actually pull the trigger, the opportunity is gone.
The market waits for no one.
It does not. So how do we overcome that? Develop the courage to act when we see a setup we believe in.
Right.
It starts with trusting your process. You've done the research, you've back-tested your strategy, you've got a plan you're confident in. Trust it. Execute the trades without hesitation.
Because that second guessing, that waiting for the perfect entry, that's often what leads to missed opportunities.
It is. And remember, even the best traders, they don't win every trade. What matters is that you're following the plan. Decisions are based on logic, strategy, not fear or doubt.
Right. It's about trusting the process even when it's uncomfortable. And that kind of ties into managing expectations, right?
Absolutely. Trading, it's not a get-rich-quick scheme. It's a skill that takes time, effort, dedication. You got to set realistic goals, understand that there will be ups and downs, winning streaks, losing streaks.
Right.
Times you'll feel confident, times you'll feel doubt. The key is to keep learning, keep growing, keep moving forward.
And that's where resilience comes in.
Resilience is huge. Being able to bounce back from those setbacks, adapt to changing circumstances, keep going even when it feels like the whole world is against you. In a field as challenging as trading, resilience is essential.
Trading is a journey. It's not a destination. There will be those ups and downs, winning streaks, losing streaks. Times you'll feel confident, times you'll feel doubt. But the key is to just keep learning, keep growing, keep moving forward.
You got it. And a big part of that is developing a growth mindset.
Growth mindset.
It's that belief that our abilities, our intelligence can all be developed, hard work, dedication, and learning from mistakes. So instead of seeing setbacks as failures, we see them as opportunities to grow.
Okay, so we're embracing those challenges, using them to improve. But what about when those setbacks really get us down, trigger those feelings of fear, self-doubt? How do we cope with that emotional side of trading?
You got to have healthy coping mechanisms for that stress, because it is a stressful profession.
Yeah.
And if you're not careful, that stress can bleed into other areas of your life.
So what are some healthy ways to deal with that?
It's different for everybody, but exercise, meditation, spending time with loved ones, hobbies outside of trading, anything that helps you relax, recharge, disconnect.
Right.
Key is to find what works for you and make it a regular thing. Take care of your mental and emotional well-being just like you would your physical health.
Makes sense. So we've talked about resilience, managing stress. What about confidence? Where does that fit into having a fearless approach to trading?
Confidence is huge. It's the belief in your own abilities, the trust that you can actually achieve your goals. And it's essential for success, not just in trading, but in anything. But confidence isn't something you're born with. You develop it over time. Experience, hard work, and a willingness to learn from your mistakes.
So how do we build that confidence, specifically in trading? Where do we even start?
One step is to focus on your past successes. It's easy to get caught up in the losses, the mistakes.
Right.
But just as important to remember the wins. Acknowledge the progress you've made.
Celebrate those victories no matter how small.
Exactly. Go back through your trading journal, highlight the trades where you executed perfectly. Even if they didn't make money, the fact that you followed the plan, that's a win.
Right. It's about the process, not just the outcome. And speaking of process, setting small, achievable goals, that can help too, right?
For sure. When you achieve a goal, no matter how small, it gives you a sense of accomplishment, reinforces that belief that you can succeed. So instead of trying to make $1 million overnight, start smaller. Maybe your goal is to follow your plan consistently for a week, or to bump your win rate up by 5%. Whatever it is, make it achievable. And when you hit it, celebrate, move on to the next one.
Break it down into those smaller steps. And I think surrounding yourself with the right people helps too, right? Positive people, supportive people.
Huge. The people we spend time with, they impact our thoughts, beliefs, behaviors. So if you're always around negative, doubtful, critical people, it's going to be tough to build confidence.
Makes sense. But if you're around people who are positive, encouraging, supportive, it makes it easier to believe in yourself.
Absolutely. So choose your trading companions wisely. And remember, you are capable of great things. Don't let fear hold you back. Embrace the challenge. Believe in yourself. Trade fearlessly.
I love that. Trade fearlessly.
Bah.
But before we get too motivational speakery here, I want to bring it back down to earth for a minute. We've talked a lot about the fears inside ourselves. But what about those pressures that come from outside? The things that can amplify those fears and make it harder to make good decisions?
That's a really good point. We don't trade in a vacuum. Financial obligations, family expectations, maybe even friends who just don't get it. All that can add another layer of stress. Makes it harder to stay focused.
Right, right. We might feel pressure to force trades to make income, or take on too much risk to try and prove ourselves. And we all know scared money never wins.
Nope, it doesn't. When you're trading from desperation or fear of judgment, it rarely ends well.
So how do we deal with that? How do we stick to our plan, our risk tolerance, when it feels like everyone's got an opinion on what we should be doing?
Well, I think communication is key. Talk to the people in your life who are affected by your trading. Be open, be honest. If you're relying on trading income to support your family, make sure your partner's on board, understands the risks. If you've got friends or family who are constantly second-guessing you, giving unsolicited advice,
Right.
try to educate them about what you're doing. Explain why it's important to stick to the plan.
So it's not about shutting them out. It's about setting boundaries.
Exactly. And sometimes it might mean spending less time around those people who are super critical or negative. You're creating a healthy ecosystem for your trading.
I like that. And remember, you don't have to share every trade, every thought with everybody in your life. This is personal.
You got it. You choose who's in the inner circle. Another important strategy, focus on your why. Why are you trading in the first place? What are the goals? What are you trying to achieve?
Right.
When you have that clear sense of purpose, it's easier to tune out the noise and stay focused on what matters. It's like a compass, guides you through those rough seas.
I love that analogy.
So take some time to think about that. What are your motivations? What are you passionate about? What do you want to create? When you connect with your why, it gives you direction, helps you stay motivated even when things get tough. And it helps you make decisions that are in line with your values, your long-term goals, not the opinions of others.
So it's about defining our own measure of success, not letting other people do it for us.
Absolutely. And it's about understanding trading's a journey, not a destination. There will be ups and downs. What matters is that we're constantly learning, growing, and moving towards our goals on our own terms.
Okay, so we've got communication, focusing on the why, any other tools, techniques that can help us manage that pressure and stay grounded.
Cultivating gratitude can be super powerful.
Gratitude. How does that apply to trading?
When we focus on what we're thankful for, it shifts our perspective from lack to abundance. So instead of dwelling on what we don't have or what we're afraid of losing,
Right.
we start to appreciate what we do have, the opportunities that are in front of us.
So it's about finding the positive even when things are tough.
Exactly. And it's empowering because you start to approach trading from a more optimistic, grounded place. Less likely to be swayed by pressure because you're already feeling content.
Makes sense. So what are some specific things traders can be grateful for?
Well, grateful for the opportunity to participate in the markets, grateful for the knowledge, skills that we've built up, grateful for the challenges, they help us grow, grateful for the community of other traders who support us.
It's easy to get caught up in the stress, the pressure,
Yeah.
but there's a lot to be thankful for.
Absolutely. Gratitude is a powerful antidote to fear and anxiety. It helps create a more fulfilling experience, no matter what the outcome of your trades is.
I like that. So to recapping, managing those outside pressures, we're talking communication, setting boundaries, focusing on our why, and cultivating gratitude. Anything else?
I think you nailed it. It's about taking control of the narrative. Define your own success, create a supportive environment for this journey.
Okay, so we've covered a lot. Different types of fear, internal, external. Lots of tools, techniques for managing those fears, making better decisions. We've talked about the importance of that trading psychology, resilience, growth mindset. Anything else you want to add before we wrap up?
Yeah, we've talked about a lot of strategies, to manage fear, both in the moment and over the long haul. But sometimes, honestly, the best thing is just to step away from the market entirely.
Like take a break, close the charts, silence the notifications, go do something completely different.
Exactly.
Yeah.
Especially when you're feeling that overwhelm, fear, anxiety, just market fatigue in general. A little distance can really help shift your perspective.
That makes sense. It's so easy to get sucked in, constantly checking prices, refreshing those charts, obsessing over every little tick.
Oh, yeah. And when you're in that state, it's almost impossible to think straight. You start seeing patterns that aren't there, chasing trades you wouldn't normally even consider, just acting out of fear, not logic.
So taking a break lets you detach, clear your head, come back fresh.
Exactly. Go for a walk, spend time with people you care about, read a book, anything to get your mind off trading. You'll be surprised how much clearer things become.
I'm going to try that. Before we wrap up completely, one more thing I think is crucial for this whole fearless trader mindset, self-belief.
Self-belief, yeah, that's a big one.
Because at the end of the day, it's you versus the market, right?
Yeah.
If you don't believe you can actually succeed, it's really hard to get over those fears and make consistent profits.
Couldn't agree more. Self-belief is the foundation. If it's not there, no amount of strategy or planning is going to make up for it.
So how do we build that? Especially in a field where you're constantly being challenged, facing setbacks.
It starts with recognizing that you can learn and grow. Trading is a skill. Like anything else, takes time and effort to master. So don't get hung up on the early losses, the mistakes. See them as learning opportunities.
That growth mindset we were talking about.
Exactly. And also focus on your strengths. What are you good at? What do you bring to the market that's unique? Remind yourself of those strengths, especially when you're feeling down.
Because we all have something unique to offer. It's about finding that edge.
You got it.
Okay.
And remember, success isn't about being right all the time. It's about having the courage to take risks, learn from the misses, and keep going even when it's tough.
It's that grit, that determination to keep pushing forward.
And believing in yourself even when nobody else does. Because you control your destiny in this market.
Love that. So to everyone listening, remember, you can do this. Don't let fear hold you back. Embrace those challenges, believe in yourself, and keep striving to become the best trader you could be.
Beautifully said. And remember, the journey is important too, not just the destination. So enjoy the process, learn from every experience, never stop growing.
Well, on that note, I think it's time to wrap up this episode of the Trading Psychology series. Thanks for joining us. We hope this has been helpful.
Until next time, happy trading, everyone.
Happy trading.